Good morning, guys. And yes, it's Saturday. I'm a nerd. But I want to take a little bit of time to do a little bit of a market recap on the week and to share this information regarding quantum and crypto that I've been delving in the late Friday and early Saturday morning hours. So let's go ahead and jump right into this. Look at the averages and see where they hit on Friday afternoon, closing out the week. Had the NASDAQ hitting plus 2.18%, which is phenomenal. We had the S&P hitting plus 1.97%. Now, what's amazing is the Dow Jones, the industrial average, hitting plus 2.47%. That is rare. And what's even more rare is the Dow Jones hitting a record of 50,000 on the year. This is an all-time high, a new all-time high for the Dow Jones, which typically takes a while to get to points such as this. So we're excited about that. We're going to take a look at some of the positions in the portfolio that did very well on the day, on Friday evening, which is mainly focused on the quantum sector, which is, I have a lot to tell you guys about quantum in a few, but quantum computing hitting plus 20.74%. D-Wave Quantum, which is who we're going to be talking about later, hitting plus 20.40%. And we have Rigetti Computing hitting plus 18.26%, and IonQ hitting plus 14.99%. But in general, the market just did very well on recovering, counter to what I had spoke about early in the morning of the market, more than likely pulling back based on sentiment and based on the previous week. But what we're going to be looking for next week, Monday, Tuesday, and Wednesday, is where this is going to go. Is it going to continue its trend reversal to the upside, or are we going to peak and then bounce back down and continue this heavy downtrend into that June or May-June time frame that I feel that the market is going to begin its real bounce back to the upside in that seasonal cycle? But let's take a look at the S&P very quickly, just to get an idea of where we may be and what we're going to be looking for next week. Hope you guys are sleeping well, enjoyed your Friday evening. We are going to go to the hourly. Let's start with the daily. The main thing that we see here is the possibility of a trend reversal. And the reason that is because we had this drop. We hit this floor at 6,780. And then we had a candlestick that is above this floor right now. We're not touching it. So we may end up forming this V and heading back to the upside. Let's look at the hourly time frame. As far as the hourly, what is nice to see is that we bounced twice almost on this lower bound at 6,780. So here was first bounce, that's a low, and that's it's barely, but it's a higher low, which is phenomenal, and that's what we like to see. Now, one thing that we do like is that one of our recent floors, or one of our recent ceilings, which was this peak right here, we have broken through with a few candlesticks. What we would like to see, if it doesn't just continue, is for it to recover back down, bounce on this level to confirm that it's the new floor, and bounce higher. And that would give us a sign that the market is more than likely going to continue changing or pushing up to the upside. But yeah, that's the market in general. One thing I did want to share with you guys today. So, Thursday, I covered a firm's earnings call and how important this company is to the future of the finance industry. And one thing to note about that, if you did listen to the recording, remember they said that they want to be like a Visa or MasterCard. They want to be offered in every retail store, and they want to be offered in every brick and mortar business. So this is a long-term play like a Visa or MasterCard that has been steadily increasing over the months and years. Here's the monthly time frame. We see that beautiful stair step. And if you compare that to Visa or MasterCard, this is just a long-term deal. This is what we want to see for a firm over the coming years. But one thing I wanted to point out is this is a supplemental information regarding their earnings call that they provide to the investors, and it's free online. You just go to the investor relations part of the site that I showed you guys before, and you can pull up this. And what I like about the way that they present this information, which most companies do this, but they give you graphical depictions of the data instead of just straight numbers, which is what's found in the 10Q and the, what's the other one, 10K. So the quarterly reports that they have to present to the SEC and make available to investors, and the annual reports. But specifically, what I am looking at when it comes to Affirm is how they grade the health of their customers. And one of the main ways that credit companies, loan companies, card companies grade the health of their consumers is by their delinquency rates. And what we see here is that for the year of 2026, we are at a delinquency rate of about 2.7, which is lower than the previous 3 months ending September 30th in 2026, and about a little bit higher than the average over the past few years. But it's not a dramatic change in number, and it's a decrease, so that's a positive thing. But this is the number, this is the data that we will be looking at to get an idea of if the everyday consumer, blue collar worker and white collar worker is able to pay back their loans, is able to handle the financial temperature of the economy at the current moment. As far as 60 days, their delinquency rate is 1.6, which is solid. Whenever, I would say, if this rises above 3%, that's when we would have somewhat of a warning that the economy and the consumer is in trouble. As far as the 60-day, if this goes above 2%, that's when we would be in warning territory of there might be something wrong and we might be heading into a recession or a difficult time for everyday consumers. But it's information like this that gives you an idea of what the economy is doing, how it's affecting consumers, and what the real world picture of it is. But Affirm, keep them on your mind. One other thing about consumer sentiment. Yesterday, I was watching a video on Bloomberg, and they were discussing how consumer sentiment is very, very low as compared to the previous years. And one thing that they did with this survey, as far as the University of Michigan, is they actually collected the information separately for Republicans, Democrats, and Independents. And one thing to note is that perspective is everything. So Republicans, they view the economy in the highest percentile, the high 90s, so right at or near 100%. They were like, this economy is great, everything is good. But Democrats were low, extremely low when it came to how the economy looks. Independents were, I guess you could say, somewhat in the middle, but they surveyed lower. Now, what I want to note about that is the fact that it all depends on your perspective when it comes to the economy. But the main thing that you want to do when it comes to things like this is to do your research, do your due diligence, because the news, politicians, they will tell you a story that may not be true. Doing your due diligence keeps you and keeps your mind and your focus on the things that are going to be beneficial to you, because there's a lot of benefits in this economy and in this tax refund season that you can take advantage of. If you bought a new car, if you're having a child, the Trump accounts, there's so much opportunity out there. It just takes so much more energy to be angry about everything and to just point at one person instead of taking advantage of the system and sticking to the numbers and the data. But besides that, let's talk quantum. So all last night, I was searching through YouTube, doing my usual search as far as videos and market information. First thing I stumbled upon was crypto. So let me briefly talk about that. So I'll be showing a video, a little preview here, but I'll let the clip run at the end of this video, or I'll post it after. But basically, the SEC chair was discussing with a Fox News host that they are so far ahead in developing regulation for the crypto industry. Stocks in my portfolio, or stocks that may be affected, that will be affected by this: Coinbase, Circle is another one. Let me stretch this out for you guys. But Circle is another one. And then Bitcoin, and it dropped this week because of Democrats not supporting and the disagreement between banks and the crypto companies. But there is so much going on in the crypto space, so many laws and regulations getting passed. According to the SEC chair, he said that he has already collaborated with the CFTC and they will be putting out a new taxonomy regarding terminology, guidelines, and things that they're going to be using to produce rails for the crypto industry. That's huge, which is more than likely why crypto surged a little bit today. But regarding quantum, one of the reasons that these stocks, the quantum stocks, may have surged even more today than the general market is because the administration recently put into development a executive order that focuses on quantum, its development and its research, which is major. Now, I believe earlier this week, right after the winter storm, D-Wave Quantum, let's go there. This is a stock for D-Wave Quantum. We're looking at the monthly time frame right now. We love the stair step here. It's very encouraging. But D-Wave Quantum held its Qubits 2026 conference in Boca Raton, Florida. If you didn't know, they did relocate their headquarters of D-Wave Quantum from California to Boca Raton, Florida, which is becoming a quantum hub, a tech hub, and a Wall Street hub also. But with that, they released a lot of information about the partnerships that they have made, which I'm going to be posting the clip either after this video or posting it in this video. But the information that they dropped in this conference, it's very tech heavy, very informational, but it gives you an idea of what the U.S. government, what let's say Andrew and Palmer Luckey is doing with this and plan to do with this type of technology, and how it's going to be beneficial and a game changer in the industry. One of the major things that I got from these videos or the conference information that they dropped on their YouTube page is that quantum is the key to making AI and the demand for power efficient. Now, it's going to take time to develop it and to incorporate it, but it's going to be the turning point once we hit a certain point in technology with quantum, where it's going to lessen the power required and make extremely efficient general computers and the AI demand for power and energy. So understanding quantum, investing in this technology, it's here right now. And I believe an Italian representative also attended this conference, and they announced that they will be buying a D-Wave Quantum Advantage 2 quantum computer. But a lot of information. Quantum is the next wave and it's big. Now, some other random news that I wanted to drop on you guys regarding some things that were happening in the market. If you are into electric cars, they are going downhill just in general. Stellantis, which is the company that's over Dodge, Jeep, Ram car brands such as those, they actually cut their EV program, as did GM and Ford earlier this year, but it cost them $26 billion, which led to a big drop in their share price on the day. 23% they dropped, which is wild. Now, it doesn't put too much of a dent in the overall picture, but in general, it's just a heavy drop. It's a heavy hit, cutting an EV program. And one other thing to note, even China is doing this. They stopped subsidizing that industry. And if you're into international news, you know that China has been known for dumping. And that's what they're doing with electric vehicles in Europe, in South America, in Africa even. And with that, BYD, one of the major car electric companies for China, is losing. It lost about 40% in share price because of earnings and trying to hit profit margins, which they can't anymore because they're not getting subsidized by the government. And that is one of the main differences between a market economy that is representative of the United States and most European countries, and a command economy where the government dictates what wins, what loses. Now that the government is not undergirding that industry of electric car vehicles, a lot of the companies and subsidiaries of those companies are failing. That's jobs, that's people's lives, that's industries, it's just a lot. And that's why I'm so grateful to be in the United States of America, one of the greatest countries in the world, the greatest country in the world, the greatest economy. I love the free market and I love investing. But other news, energy demand is still real. One of the stocks in our portfolio, Chinery Energy, they did apply to the Department of Energy to expand their Corpus Christi location, gas location in Texas. So if you don't think that power and energy is going to get a substantial push in the market, then think again. So LNG is the ticker for that stock. And I believe there's two other things I wanted to note on the day. Carmen Holdings, which is one of the space stocks that I hold, along with AST Space Mobile, which should be having a satellite launch in the latter part of this month. But they just announced the full acquisition of Seaman Composites. So now they are one of the major contractors to the U.S. government regarding hardware design and development of spacecraft, shuttles, heavy industrial components that make up military equipment and development and things along those lines. But they just finished that acquisition, which gives them not only the industry of deep space, but also addressing the need of deep sea programs, such as what the Navy may need. So that's a little bit of expansion. And last thing on the note this lovely Saturday morning is TJ Maxx. I would call TJ Maxx the Temu in real life, but better. And they just actually opened a new location in New York, which is something that you don't hear about nowadays. You don't hear about companies or consumer good companies opening new stores. That just lets you know that the consumer is booming. They're still spending. That these consumer companies, if they're in the right industry, they're growing and they are receiving a lot of demand, and the economy is just strong and consumers are healthy. But other than that, guys, that's all that I have That's all that I have for you this early morning Saturday. And I will more than likely link the video or put the video of that summary of the conference and that portion of the crypto that I wanted to share with you guys after this. If you're a nerd, the information will probably be cool for you to understand and listen to and grasp. If you're not, then have a great Saturday, have a great weekend, and we will reconvene probably tomorrow. Just take a look at Bitcoin and the crypto markets and get ready for Monday. So have a great weekend. Peace.
Matthew Steckman, who's President and Chief Business Officer at Anduril Industries.
I think when we started the company, I wouldn't have said that quantum would have been on our bingo card. About 2 years ago, I think the technology matured to the point where we started to believe there was a national security application today. Maybe 2 years ago, we kicked off a campaign to really start to understand quantum optimization, its impact on what we do. I have been shocked at how fast and mature the technology has been to deliver actual useful results to the problem sets that we're working on. My biggest shock has been this stuff is ready. It's ready to use today, and we're going to continue to use it with our partners and with the national security community to its greatest effect possible.
I look at quantum as similar to where cloud and AI have been over the last 10 years plus. And I think the next 10 years you're going to see it take off just as those technologies and even some level of integration of those technologies. And so for us, it's about how do we stay ahead of the problem sets that the U.S. national security space is looking at, and we believe quantum has a capability to do that.
I think every advanced economy needs a quantum strategy overall. Senator Butti, who was on stage earlier, is in charge of technology strategy for the country of Italy, and it was one of his ideas that Italy needed to be active as a matter of long-term industrial policy in quantum and quantum computing specifically. If you think about it, though, specifically, there's so many government-oriented applications for quantum optimization, annealing. Transportation system design, energy grid, management of the energy grid, energy reduction associated with figuring out how to substitute for some of the AI data center demand that's out there. Improving the confidence in the decision-making processes of government if you have a more analytical system involved. We're very motivated by the energy and environmental impact or the opportunity for reduced energy and environmental impact of quantum computing compared to classical. And so having the on-prem system will give us better ability to monitor, to measure precisely the energy consumption associated with having it, and then specifically for those particular uses compared to what we're substituting for.
From our perspective, it really comes down to three very critical components. One, you're certainly going to take some risk when you're talking about evolving technology as a business. That's the nature of what we do in the technology environment that we work in. And looking at where the potential applications could go with quantum, and it's not all about quantum. I think what we're going to see, particularly in the national security space, is a hybrid model of classical compute underpinned by quantum to solve very, very complex problems very quickly. And so just looking at it from that perspective, it made sense for us as an innovative company to make that investment and continue to build on some of the transformative technologies that we are already a part of. The second piece is the U.S. government is certainly, I would say, a skeptic when it comes to quantum and its application. I think it's a healthy skepticism. Back to Alan's point earlier, right? You got to ask the hard questions in order to prove out the technology. But one thing that certainly has helped us is having the hosted system in our facility where our customers can actually come see it. And so, they can put their hands on the technology, they can see that it is real. The data piece of it and proving that out is obviously critically important. And the announcement we made earlier with the collaboration and partnership with Anduril is about actually benchmarking data and proving to those customers that there is real value there. And then, the third thing for us is classification of data. So as you get into some of these really, really challenging problems in the national security space, they get to levels of classification that you can't operate in I would say, general cloud-like environment. So having it in our facility where we can control access and protect the sensitive data that our customers care about is another critical component of why we made the investment we made.
And other approaches and where D-Wave's strategy fits.
Yeah. So this is a big debate in the quantum industry. What's going to win? Is it superconducting from companies like D-Wave or IBM or Google or Rigetti? Or is it trapped ion from companies like IonQ or Quantinuum? Or is it neutral atom from QEra or Pascal or photonics from PsiQuantum or Xanadu? It's a huge debate that's going on right now. And the way the debate kind of unfolds, the superconducting proponents say, well, superconducting is 1,000 times faster. It's just physics. And why would you ever want a quantum computer that's 1,000 times slower? So, of course, superconducting is going to win. But then the trapped ion or the neutral atom proponents will say, yes, but our qubits are natural qubits. Atoms, ions, photons, they have much higher fidelity, so it's going to be much easier to error correct. We'll be able to get to error-corrected gate model quantum computers much faster than superconducting. Maybe superconducting will never even get there. So that's kind of the way the debate plays out. But with the acquisition of quantum circuits, we just totally put that debate to bed. Because this dual rail technology that quantum circuits has developed is absolutely revolutionary. It is transformational. We are talking about superconducting qubits, so it's the speed of superconducting 1,000 times faster than the other modality, but it has the fidelity of trapped ions or neutral atoms. Very high quality qubits, making it much easier to error correct, much more efficient to error correct. So now, in some sense, we've got the best of both worlds. Frankly, I don't know how the other modalities compete at this point because they don't have the speed that our qubits have. I also don't know how the other superconducting companies compete because they don't have the fidelity. Error correction is going to be much harder for them. This really does put D-Wave in a transformational leadership position.
You had the roadmap earlier about how the dual role tech.
About the differences of commodities versus securities. And here's what he told us in terms of oversight there. Watch this.
For too long, we've had the Gary Genslers of the world regulating by enforcement, claiming that every digital asset is a security. And Chairman Paul Atkins and I really disagree with that view. We believe that most crypto assets in the markets today are commodities. These are digital assets that maybe were issued as part of a securities transaction, but they trade a lot like oil, gas, and other commodities in our markets. And the information that is prevalent to and important to trading these assets comes from the markets at large. It's not coming from a single source of information, as you see with the capital markets with an issuer. And so we need to build markets that allow for these assets to trade with clear rules of the road, and we can't regulate by enforcement anymore.
And Mr. Chairman, I think that's why the Genius Act was celebrated so much, because you did make a clear delineation of what is a commodity and what is a security. So talk to us about how we should look at that and what specific differences you have identified.
Yeah, well, so so the Genius Act was great. It focused on stable coins and put them squarely in the banking sector. So my good friend and controller of the currency, Jonathan Gould, is working diligently on coming up with that regulatory framework for stable coins. With respect to other sorts of things, I gave a speech a few months ago delineating what we are going to be working on and coming out with here shortly is a taxonomy, so-called, as to what are digital commodities versus tokenized securities, so we can give clarity to the marketplace as to what it is, and as Chairman Seelig was talking about, end the regulation through enforcement that has so long bedeviled this whole area of financial services, even predating the whole crypto world and going back, to decades, as between, what's in the CFTC realm, what's in the SEC's realm. So there are digital commodities and digital tools and digital collectibles that we have described and will be outlining in regulation. And then we have tokenized securities. So the first three clearly within the CFTC's rule remit, and then tokenized securities in the SEC's remit. So this is one of maybe the only time that a regulatory agency is voluntarily ceding clear jurisdiction to another regulatory agency. But again, we are out to harmonize the rules as between the SEC and the CFTC, giving clarity and certainty to